Hello, and welcome back to Today Assess Report, your trusted source for the latest updates in crypto, global finance, and breaking market developments. Today's story is urgent, fast-moving, and incredibly important for anyone following XRP and the future of crypto regulation. We are looking at a powerful combination of two major forces shaping investor sentiment right now: the momentum building around the Clarity Act in the United States and rising geopolitical tensions involving Iran. These two completely different headlines are now colliding in the market narrative, and investors are trying to understand what this could mean for XRP's next move. Over the past few days, discussions around regulation have intensified while global risk signals are flashing across financial markets. When regulation clarity meets geopolitical uncertainty, volatility often follows, and that is exactly why analysts are calling this moment critical. Stay with us as we break down what's really happening, what it could mean, and why XRP holders are being told to prepare. Right now, the biggest driver behind the XRP conversation is the renewed optimism surrounding regulatory clarity. Lawmakers in the U.S. Congress are pushing forward discussions that could finally define how digital assets are classified, traded, and regulated. For years, uncertainty has been one of the biggest barriers preventing institutional capital from fully entering the crypto space. Investors have repeatedly asked the same question: is XRP a security, a commodity, or something entirely different? That lack of definition has created legal battles, market hesitation, and inconsistent policy messaging. But now, momentum appears to be shifting. The proposed Clarity Framework aims to create structured guidelines for crypto companies operating inside the United States. Analysts say that if these frameworks are finalized, projects with strong infrastructure and real-world utility could benefit the most. XRP continues to be mentioned in these discussions because of its focus on cross-border payments and financial integrations. This brings us directly to Ripple, the company most closely associated with XRP's global expansion strategy. Over the past several years, Ripple has positioned itself not just as a crypto project, but as a financial technology provider working with banks and payment institutions worldwide. Despite legal challenges, the company continued expanding partnerships across multiple regions. According to market observers, this persistence is now starting to pay off as regulatory conversations mature. Ripple's leadership has consistently argued that clear rules, not loopholes, are what the industry needs. As discussions around the Clarity Act grow louder, many investors believe Ripple could be one of the strongest beneficiaries if structured regulation becomes reality. The market tends to reward projects that survive uncertainty, and Ripple has spent years navigating exactly that environment. This is why traders are watching every policy update with intense focus. One of the most closely followed voices in this conversation is Brad Garlinghouse, who has repeatedly stated that the tide may finally be turning for crypto regulation in the United States. In recent interviews and public comments, he emphasized that lawmakers are beginning to better understand the difference between speculative tokens and utility-driven blockchain infrastructure. According to Garlinghouse, regulatory clarity would unlock innovation instead of pushing companies offshore. Investors are interpreting these statements as signals of growing confidence from Ripple's leadership team. Market sentiment often reacts strongly when executive confidence aligns with policy momentum. That alignment appears to be forming now. Analysts say this doesn't guarantee immediate price movement, but it does create a stronger long-term narrative for XRP. When leadership messaging, legislative direction, and institutional interest begin moving in the same direction, markets tend to respond. At the same time, the legal shadow that has followed XRP for years still plays a role in how investors interpret new developments. The case involving the U.S. Securities and Exchange Commission remains one of the most important regulatory events in crypto history. While several rulings have already clarified parts of the situation, the broader impact continues shaping policy discussions. The industry has been watching closely because this case effectively became a reference point for how digital assets might be regulated moving forward. Analysts say that regardless of final legal outcomes, the conversation itself has accelerated policy evolution. Many lawmakers now recognize that outdated financial frameworks cannot fully address modern blockchain technology. This shift in understanding is one reason the Clarity Act is gaining traction. Investors see this as part of a larger transformation happening within regulatory systems worldwide. However, while regulatory optimism is building, global geopolitical risk is adding a completely different layer of uncertainty to the market. Rising tensions involving Iran are creating caution across traditional financial sectors, as well as crypto markets. Whenever global conflict risks increase, investors typically move towards safer assets or reduce exposure to volatility. Crypto markets often react quickly to geopolitical signals because they operate continuously across global time zones. Analysts are warning that even strong regulatory news can temporarily lose impact if global instability intensifies. This doesn't mean fundamentals change, but short-term sentiment can shift rapidly. XRP traders are now balancing two narratives at once: positive regulatory direction and uncertain geopolitical developments. This combination is why market volatility could increase over the coming weeks. Some analysts believe geopolitical tension can indirectly benefit crypto in the long run, especially when it increases awareness of decentralized financial systems. Historically, moments of global uncertainty have often pushed investors to explore alternative asset classes. Crypto markets have experienced similar patterns during previous global events. However, short-term reactions are rarely predictable. Market liquidity, trading volume, and institutional positioning all influence how prices respond. XRP's role in cross-border transactions makes it particularly sensitive to global financial conditions. When international payment systems face uncertainty, technologies designed to improve transaction efficiency often receive renewed attention. This is another reason why investors are carefully watching both regulatory developments and geopolitical headlines simultaneously. Another key factor shaping market expectations is institutional participation. Large financial entities typically wait for regulatory clarity before allocating significant capital into emerging asset classes. If the Clarity Act progresses further, analysts believe institutions could increase their exposure to utility-focused blockchain projects. XRP's infrastructure-based use case keeps it in these conversations. Institutional involvement tends to stabilize markets over time, even though early stages can bring volatility. Investors often underestimate how much regulatory frameworks influence capital flow. Without clear rules, institutions hesitate. With clear rules, allocation strategies begin forming. This transition period is exactly where markets currently stand. Meanwhile, retail investors are reacting quickly to headlines, social media discussions, and expert predictions. The combination of urgent geopolitical news and regulatory optimism is creating emotional trading environments. Experienced analysts warn that emotional trading often leads to short-term volatility spikes. XRP communities across multiple platforms are actively debating what comes next. Some believe regulatory clarity could trigger a long-term breakout narrative, while others remain cautious due to macroeconomic risks. Both perspectives highlight the complexity of the current market environment. Crypto rarely moves based on a single factor, and this moment is a perfect example of multiple forces interacting simultaneously. Global leadership decisions are also playing a role in shaping investor psychology. Policy direction under Joe Biden continues influencing regulatory tone within the United States, particularly around financial innovation and digital asset oversight. Political transitions, economic strategy adjustments, and international relations all affect market confidence levels. Investors are not only watching crypto policy, they are watching broader economic direction. This connection between politics and markets is becoming increasingly visible as digital assets grow into mainstream financial discussions. XRP's regulatory narrative places it directly inside this evolving policy landscape. Another important element to consider is timing. Markets often react before final decisions are made. Anticipation alone can drive price movement, especially when strong narratives develop. Analysts say this is exactly what may be happening now with XRP. The Clarity Act discussions are not yet finalized, but investor expectations are already forming. This anticipation phase can create powerful momentum cycles. However, experienced traders also warn that expectations must eventually align with real outcomes. When expectations become too aggressive, corrections can follow. That is why risk management remains critical during high-news environments like this one. Technical analysts are also monitoring XRP chart patterns as regulatory conversations intensify. While fundamentals shape long-term direction, technical indicators often guide short-term trading behavior. Support zones, resistance levels, and volume trends are being watched closely by traders attempting to position ahead of potential announcements. When regulatory signals align with technical breakouts, markets sometimes accelerate rapidly. However, unpredictable geopolitical developments can interrupt technical setups. This creates a highly dynamic environment where both macro and micro signals must be considered together. Market psychology continues to shift as new information emerges almost daily. Crypto markets move fast, but narrative shifts can move even faster. Just weeks ago, regulatory uncertainty dominated discussions. Now, clarity optimism is gaining traction. At the same time, geopolitical caution is rising. This combination is creating one of the most complex sentiment environments XRP has faced in recent months. Investors are being forced to analyze multiple global factors instead of focusing on a single storyline. That complexity often leads to increased volatility, but also increased opportunity. Long-term investors are taking a broader perspective. Instead of reacting to daily headlines, many are focusing on infrastructure development, adoption growth, and regulatory direction. XRP's positioning within cross-border financial technology continues to support its long-term narrative regardless of short-term fluctuations. Analysts emphasize that major market transformations rarely happen overnight. Regulatory evolution, institutional integration, and global adoption typically unfold over extended periods. This perspective helps explain why some investors remain confident despite current uncertainties. As we move forward, all eyes remain on regulatory developments in the United States and geopolitical signals involving Iran. These two narratives may seem unrelated, but in modern financial markets, everything connects through investor sentiment. XRP stands at the intersection of innovation, regulation, and global finance, making it one of the most closely watched digital assets right now. The coming weeks could bring major clarity or increased volatility, depending on how these stories develop. For XRP holders, preparation means staying informed, managing risk, and understanding that markets react not only to facts but also to expectations. Stay connected with Today Assess report for every critical update as this story continues to unfold.